Hi guys, welcome to Depreciation 2 of 5. Today we're going to be looking at depreciation using what's called the reducing balance method. Okay, it's called the reducing balance method because it's the amount of depreciation actually charged decreases over time. So what you did the last time, we looked at reducing at straight line depreciation, and here we're looking at the book value of the asset, so how much the asset is worth in the statement of financial position. And with straight line method, it's a nice straight line. It decreases by the same amount every year until it gets down to either the residual value or down to zero. Okay, but for most assets, quite often, particularly things like motor vehicles, they reckon that a motor car depreciates by about 20% of its value when you drive it off the forecourt. There's a lot more depreciation in the early years, and the amount of depreciation declines, and therefore the value of the asset stops falling so quickly in the later years. So straight line depreciation doesn't reflect the actual value, particularly of something like a car, where you do get that large fall in value very, very quickly over the initial year. And the other reason why we quite often use reducing balance depreciation is because of the actual cost of ownership. What you find with something like a car, sure, if you ask your parents, the older the car gets, the more you spend on maintenance. So the other argument for not using straight line is that under straight line depreciation, the cost of depreciation stays the same, but the cost of owning that car increases every year because the maintenance cost goes up. Whereas what we try to do with reducing balance depreciation is we're trying to make allowance for that increase in the maintenance costs by, over time, reducing the amount of depreciation that gets charged. So, how do we do it? It's more complicated, but it's not that much more complicated. And ironically, it's actually easier to do on a computer than straight line depreciation. But what you'll get given in a question, you'll be told something along these lines. A lorry or a machinery or a car is purchased for a fixed amount, and you will be told that we're going to use the reducing balance method, and you'll be told a percentage. So what I would do if I was doing a question like this, I would lay out the calculations the way I've done it here. In year one, the opening carrying amount will be the original cost of the car, in this case $40,000. Okay, so that's where we're going to start year one. So what we need to do at the end of year one is we need to work out how much depreciation we need to charge for that year. So we do 40,000 times 40%, which is 16,000. And therefore the closing value or the closing carrying amount of that car is going to be 24,000. The next year, we're going to base our 40% depreciation on that closing value. So put 24,000 in for year two, that's the opening carrying amount. Okay, we multiply that by 40% to give us 9,600 depreciation in year two, and therefore the carrying amount that would appear in the statement of financial position is 14,400. And then we'll repeat it again for year three. So 14,400, the opening carrying amount times 40% is 5,760, and therefore the closing value of my asset is 8,640. All right. What's that going to look like in the statement in the provision for depreciation account? Well, as before, the first double entry is going to be a debit entry of 16,000 straight into the income statement as an expense, and therefore we need to make a credit entry of 16,000 because that reduction in profit is kept by the business until we actually dispose of the asset. So therefore, the balance carried forward, the amount that's going to appear in the as accumulated depreciation at the end of year one, that's 16,000. Year two, we've now got 9,600 extra depreciation that's going to appear in the accounts. So we've got a balance brought forward of 16,000. We add on some more of that profit that we've taken out from the income statement. So we've got 9,600 extra depreciation gone in. The balance of the two accounts is going to be 25,600. and therefore to the start of the next year, the amount of depreciation for that asset in the account is now 25,600, and then we repeat for year 3. So in year 3, we need to add on an extra 5,760 depreciation. The total depreciation will now be 31,360, and we need to bring the balance forward for the start of year 4. So that's going to be 31,360. And what you can see here is that the amount of depreciation charged each year is actually declining. It's gone from 16,000 down to 9,600 and now down to 5,760. So the amount of depreciation has reduced. Journal entries look exactly the same as we did last time, but obviously with different figures in. Okay, this time I'll put the commentary in, which you'll need to do in an exam normally. So we've got a debit entry straight into the income statement for depreciation of 16,000 for year 1, and therefore we've credited the provision for depreciation account. Okay, so year 2, we credited the depreciation account for 9,600 because we put an expense, a debit entry straight into the income statement for 9,600, and then year 3, credit the provision for depreciation account 5,760, debit the income statement. What's it going to look like in the statement of financial position? Well, as of last time, you've got the cost, you've got the accumulated depreciation, and you've got the carrying amount. The cost is always going to be 40,000. Okay, the amount of depreciation is increasing, but more slowly year on year because we've used the balances carried forward from each year from the provision for depreciation account. But what's happened to the carrying amount is it's fallen quite quickly in year 1, a little bit more slowly in year 2, and then even more slowly in year 3, and it would carry on falling, but by a smaller amount each year. Okay, I've got a set of questions here for you guys to do. Don't forget to fill in the sheet, which I haven't had it at the moment, but we'll add very briefly saying how confident you feel with this topic. Good luck with it, hand in your homework on time, and let's have a good lesson on this. Thank you very much. Bye-bye.